Welcome to another episode of the Self-Storage Insight Podcast. I'm Ben Shirey, and today I'm joined by Powell with Radiant Storage. Powell was one of the managing partners there, and so you're going to meet with us today, talk to us a little bit about how he got started in the industry, and some insightful conversation here with him. So really looking forward to it. Powell, if you don't mind giving us a little bit of your background, kind of where you came from, how you got into storage, that sort of thing.
Yeah, I appreciate it, Ben. Thank you so much. And thank you so much for having me on your show as well. I really appreciate it. So just to kind of rewind a few years, I was in corporate sales was my W-2 job. So I was, for a decade, I've been in corporate sales for some Fortune 500 companies. And at the time I was doing pretty well, and I decided like, hey, I want to move some of this money, not really keep it in the stock market, but put it in something else. And real estate really was my solution. And my dad had been involved in real estate and wanted us to buy some real estate. And I live in Southern California, although I'm from Northern California, in the San Francisco Bay Area. I just didn't really understand how you could really buy houses at that point, and like how this was all going to work.
Right.
And around 2015 is when I realized that you could buy residential real estate and not have to live in the same geographic location. So I ended up buying my first house in 2015. Really quickly from there, I said, you know what, I'm going to scale this up because it's not going to go fast enough. So I started buying multifamily. I started getting involved in apartments. Did that and was able to become general partner on 5 different syndications and 7 different properties. So have like over 1,100 units in multifamily. But since then, a bunch of them have sold. But when COVID came around, I decided that I would choose another asset class, not necessarily to go 100%, but add another asset class to my portfolio. And
Right.
so that asset class ended up being self-storage. And I thought, oh, this is great. Sounds great. Everything that I hear on podcasts as well as read about it sounds great. But until we actually buy one, we don't really know. So I ended up buying my very first one in 2021, January 2021. Since then, ramped it up, felt it was very great. Looking and thought I could bring in some of my multifamily investors into self-storage. And so since then, we now have 16 properties under the Radiant Storage brand. It's like 650,000 square feet and
Awesome.
over 5,000 units. Yeah.
Right. Now, so are they pretty standard in the size? So when you're looking to purchase an additional facility, for example, I mean, you bought 5 a year or however that ramped up. Do you look for a specific size of a facility as you're in that kind of building phase for your business?
Yeah, I would tell you that the way that I've done it and the way that I've almost always done it is that I really size out my investors first. So I get an idea of how much money can I invest in the deal, right? How much money is going to come, how much equity do I have, as well as my investors, how much are they prepared to invest? That gives me a better idea of what I can invest in. So I'm not going to look at a huge portfolio that is far outside of what I think I can raise as capital or that I can bring in as capital. I'm going to look for something that I feel is like within our sweet spot. So now that has changed over time, right? My very first property, that was a very small property that I just said, I'm just going to ask like 7 friends and family. And then 6 of them said, yes, I'm in. Because I was like, hey, this is a new asset class. I just want to let you know it's a new asset class. I haven't done any self-storage yet. I've done multifamily, but I think this is really great. These are the reasons why I think it would be great. Is anybody interested? And 6 out of the 7 people said yes. So I went and bought a property, smaller one. Those aren't really the size that I look for anymore. But that's what
getting your foot in the door, kind of, and testing the waters.
Exactly. And understand how much equity we had so that I could go buy a property around that would fit that problem. Now I have, more investors that are interested in what I'm doing. So I can go buy a lot larger facility or a portfolio. Right?
Awesome. Yeah, very interesting. And so talk to me a little bit, if you will. You work with Copper Storage Management with remote unmanned facilities, correct? As far as they do a management service for you guys manage your properties. How has that kind of changed the way you scale your business, or how has that made you more efficient in growing the business?
Yeah, I mean, our relationship at Radiant Storage with the Copper team is fantastic, and they do manage everything remotely. So I don't know. We've been in contact with them since we started, like even before
Okay.
we started, right? So it was a lot of, hey, help us. Like this is what we think when we underwrite this deal. You guys have been running these properties. You guys know self-storage more than we do. So tell us, what do you think about this facility? What are our numbers like? Are our numbers something that is like accurate or not? Are we way out of the, just not even close?
Right.
So we've been asking them for guidance for a long time. We've been ever since we started with them, they've been a part of our property management team and helped us throughout this whole time. And so
Okay.
it's been great.
Awesome. And yeah, and that adds a little bit of a peace of mind, I think, too, as you're getting ready to, venture into this new asset class. Just to have somebody that has been there or has a little bit more knowledge on the industry than you do coming into it. Yeah, that's awesome.
Yeah, absolutely. Absolutely.
So you've just been in the industry a few years. I was just kind of curious, as far as investing in the industry and that sort of thing, how have you already seen the industry change over the last, 2 to 3 years? It's rapidly making changes through COVID and through, all the different shifts in the market and the economy. What's been kind of your experience with that?
Yeah, so there's a number of different ways that it has changed, and we've seen it, and we continue to go through it, and we're going through other changes like currently, right? So when we first got in, I would say, in the middle of COVID, when we got in and started doing storage. So a lot of this was, okay, seeing how the market was before that and what the industry was like before that was the industry was moving towards remote management, but slowly, right? Slowly moving towards remote management. Now it's picked up a lot of steam because with COVID, every business was trying to figure out how can we run this as unmanned or as little manned as possible, right?
Right.
Restaurants and QR codes and whatever, drive up options, all that kind of stuff, right? So everybody was trying to figure out how to do this. Well, that was our play from the beginning, was to run these remotely. So it just fit what we were going to do anyway, but the industry is accelerated in that way. And, just customers were just much more inclined to be okay with, hey, they don't have anybody in the office. I can just do this on my phone. I can just do this over a phone call. It's much, and I'm okay with that. And I don't really need somebody to show me where my unit is. So just a lot more acceptance from the consumers in the industry with remote management. And I would say also that the industry has changed a lot in terms of the investor side as well. Even though we've just been in it for a couple of years ago, the investor interest was not as strong as it is now. Now the investor interest is stronger, right? And so there are more people, there's more interest out there. There's bleed over from other asset classes. You take like office, which is kind of been decimated. You take multifamily, which is super hot and very competitive. And a lot of that bleed off goes into where? Well, it goes into a bunch of asset classes. And then a bunch of people think, oh, wait, how did storage do during a recession? Well, and they look at kind of the historicals and they say, well, if we're heading towards any type of recession, I might be interested in storage. So now more and more people are interested in storage. So yes, the investor interest has gained a lot of momentum. And I'll tell you, probably a third way that things have changed since just in the last few years is that we were in peak times, like accelerated peak times in COVID, in terms of occupancy, in terms of rates, and everything was just like storage is just doing incredibly well during COVID. However, that is not sustainable. That was not sustainable. Now people are like, okay, not everybody is staying home all the time, hunkered down, right? People have, going back to school. People are going back to work. I don't need, my house isn't as cramped as it was before, right? Now I don't need that storage unit. So there has been a slower decline, coming back to like what were more standard levels of occupancy and rates pre-COVID. So that is another thing that I see that's happening right now. I guess the third way.
Right. And then also with that, the stimulus money, everybody had a bunch of extra influx in cash all of a sudden, didn't know what to do with it. So they bought a bunch of stuff they didn't need.
I bought a bunch of stuff.
And that's good for business though, for sure.
Exactly.
Right. So with that kind of being where the industry's come through the last few years, what do you think that it's going to look like, in 3 to 5 years? Does it continue to go more towards the remote managed facilities, or, does
Mhm.
that kind of slow down, or what do you kind of see the future holding in the next couple of years for that?
For the remote manage, I think that's going to accelerate. So I think that we're just still on the very early stages of that. I think there's a lot of people, a lot of companies are in the traditional path, which is, hey, you have somebody in the office and you have somebody there in the office while your office is open, while your facility is open. Um, Companies are still doing that, but there is more of a move towards remote, and some of it's going like a step in between, like a hybrid step. So there's somebody there, but they don't have certain hours, and so when they're not there, they have a call center that takes over at that particular time, so that you don't need that one person there all the time. You might have a person who rotates among different facilities. So there's
Okay.
kind of a gradual movement, but there's also some companies that are just a little bit more like us that are saying, I don't want to go gradual. I would just go straight to
Right.
remote manage. And that's what I want to do. So I
Yeah.
think that's going to be the wave of the future.
Okay.
And I think it's going to happen all over the place. Mhm.
Yeah, I mean, for me, I think too, as I'm looking at it from a business perspective and investment perspective, right? As I look at scale, how fast can I scale if I don't have to hire employees, or I don't have to manage employees that are running these facilities? So how much did
Mhm.
that kind of play into, as you invest in a new property, you have somebody that's kind of managing that whole side of the business for you, where you're just looking for investments? Does that kind of play into the way that you scale the business?
Yeah, absolutely. I mean, that's a big part of it because, when you're dealing with people, you got to have handbooks, SOPs, and you got to have training, you got to have
Right.
hiring. What happens if, you hire one person, but what if that person doesn't show up? Is they're sick or whatever? They can't show up for the next couple of days, whatever. It's like, is my facility closed? It's like, well, all of a sudden it's going to be closed because that person's not there. Now, do I have to
Right.
hire two people to be there? Now a manager and somebody, that's a lot of payroll costs, these
For sure.
overlaps. So
Yeah.
it's you get into all these kind of issues. Not only that, you got your payroll taxes and you got all kinds of other things that you have to pay. Employees, and they also, there's ancillary things that they bring to the table. So there's things that they can do that a remote managed facility, I'd say we struggle with. So give an example: we don't sell boxes or tape or bubble wrap, things like that.
Right.
So we don't really have those merchandise sales. So we don't have that income, but we don't have the person in the office to, for that cost either. So,
Right. A little
yeah,
bit of a
so there's kind of
trade-off.
trade-offs. Yeah, a little
Right.
bit of trade-offs.
For
Mhm.
sure. And so as far as, yeah, over the past few years, with purchasing these, 16 facilities, what has been kind of your biggest takeaway maybe from investing in buying facilities? And do you wish you would have done it sooner versus, how do you kind of feel?
Yeah.
What's your takeaway from that?
Yeah, I mean, well, the first takeaway was a very, very tangible takeaway. So about a year ago, was when I stepped out of my W-2. Was when I said, okay, I'm going to do this full time. So
Okay.
I got to the point where the business was taking off and we were buying a lot of properties, but I still did have a W-2, and it was very difficult to do both. And I had
Right.
to have a meeting with my wife and to talk about, like, okay, well, this is what's happening. I got to
Yeah.
make a choice either way. I
It's a
can't
big decision.
do
Yeah.
what I'm doing anymore. It's just burning the candle at both ends and staying up too late, and it's really hard to concentrate. So that was the biggest tangible difference that I felt, is that was able to, basically retire from the W-2, from the corporate world, and focus on doing this full time. And that's been great. And it's something that tangible I can feel. I know it's different every day, and people around me, my wife and everything, see the difference as well.
Right. Awesome. Yeah. And then
Mhm.
kind of just the correlation maybe between the multifamily ventures versus the self-storage facilities. What do you like about the multifamily more than the self-storage, or the self-storage more than the multifamily, or are they not relatable
Mhm.
at all?
Oh yeah, I mean, they're definitely relatable, and I have this conversation all the time with my investors, because so many of them are like me, come from the multifamily world,
Right.
and so they're exposed to the multifamily, understand multifamily, didn't understand self storage, and so what is the difference? So they're always asking me, like, what's the
Yeah.
difference, or why do you like it, or what do you don't like? Well, I'll tell you, the big advantage that you have in multifamily is there's a lot more of them, right? I mean, there are
Right.
millions of multifamily properties, from 5 units to, whatever, 300 units. There's so many of them across the United States, right? There's a bunch. Now, there's also a lot of competition. There's a lot more people involved and a lot more people buying. And there's a lot of the institutional buyers out there for those, say 100 units and more. But that is a big advantage, that you can just buy them all over the place, in any city. The other advantage that they have is they have a sort of a uniform lending system, right? The Fannie Mae, Freddie Mac, agency debt is kind of the path that you're always trying to get to in multifamily when it comes to the lending, and that is good and bad. I mean, it's an advantage because everybody knows it and everybody's shooting for it, and you know what you're trying to get. In storage, there is no Fannie Mae, Freddie Mac, so everything it's a lot more wild west. It's more like, okay, this bank wants this, but this credit union wants that. This life insurance company wants something else, and so now it's not just like one clear path of, okay, this is what we're all trying to use as a template to get to. It's like, well, they have a bunch of different options. Some of them are great. Some of them are like, oh, this is your option is terrible. So, and you're like, you guys don't like storage, I guess. That's what I always say is, you guys just don't like storage. That's fine. I'm not going to get somebody else. But yeah, that is a major difference as the lending side. I would say that also, when you just think about it in residential, you're dealing with people, right? You're dealing with people, and whether the people are good or bad, they break stuff, they cause wear and tear. So you have a lot more wear and tear on your property. Your carpet is worn and tear, your toilet, faucets, garbage disposals, they all break and they all have issues a lot,
For sure.
But storage is obviously, your couch isn't causing wear and tear by just sitting there, right? These, and there's not that many mechanical equipment inside of storage. It's like you got a door that moves up and down. Right. Besides that, you got walls, right?
Little less stuff to maintain, for sure.
For sure. Yeah, exactly. A lot less. And so that's a big advantage with storage.
For sure. One question I had for you too was, are most of the facilities that you purchase, are they already occupied, or they're already pretty close to full occupancy, or have you got into any facilities where they were really low occupancy and you had to do like a lease up phase? And how did that look for you? Did you do a lot of marketing, that sort of thing? I was just kind of curious on it.
Yeah, I would tell you that there's when we look for we're value add investors, so we're looking for value add properties, right? And these value add properties generally are going to fall into one of 4 different ways of adding value. So those ways are low occupancy, like you mentioned, low rent compared to the market, expansion possibilities. So, can we add some, we got some land next door. What can we do with that land? Right. As well as the last part is like operational inefficiency. So what ways can we cut expenses? Right. Okay. Those are the 4 areas that we're looking for, in any combination of those 4. So low occupancy has definitely been is definitely one of the value adds that we see. So we've taken over several properties that have low occupancy, and I'm talking anywhere from 55%. That was one that was 55% occupied. We took over another one, was 60, another one was 65. Our very first one was 65. So just our very first deal was 65% occupied. And we've taken over, other ones that are, all over that range, 70. We've taken over ones that are 95, 98% occupied. So it's the whole range of that. Right. I will tell you this though. Well, I don't know if you want a real quick story, but when we were buying this property and we're saying, hey, we're value add investors. We are previously multifamily investors. I'm talking about my very first one, 65% occupied. We did bring it to several different lenders, and we were told, like, you guys shouldn't do this deal. Like, you shouldn't do this because you don't have any experience in self-storage, and you should buy the advice I was given was, why don't you buy a stabilized property and then run it for like 5 years and then sell it, and then after you gain some experience, then go buy a property like this. And I was like, that's terrible advice. And so I was like, we're just not going to use you as a lender. So I was like, okay, we're not going to use you as a lender. That's terrible advice. Right. So I just thought it was kind of funny, but since then, the property's doing really well. I mean, it's like 85% occupied right now. And it took about a year and a half to get to that point.
Okay, nice. Now, have you found like one lender that you specifically try to use for properties, or do you just go with somebody in the vicinity of the property you're looking to purchase?
So we have found a lender that we try to go, but we haven't found any lender that actually will go to every one of our facilities. So we have experience with We have experience with credit unions. We have experience with CMBS, right? CMBS lenders. We have another loan out with regional banks. We have one with private lenders. We have a couple with private lenders. And then we've had some with seller financing. So we've had sort of this whole range of different types of lenders. And you know, like I said, it's kind of like storage. It's like the wild, wild west. You know, like there's some people that love it as far as lenders, but that doesn't mean that they're going to go to everywhere in the United States. Maybe they stay in Texas or Louisiana or wherever, but they won't go to other states. So
yeah, I just thought I was kind of curious on it, as far as I know you're covering multiple states and stuff with your kind of geographic location. So just kind of interesting there. So this episode of the Self Storage Insight podcast is brought to you by CC Storage. CC Storage is a property management software that enables you to pass card processing fees onto your customers, immediately impacting your business's bottom line. If you're looking for all the convenience of processing cards without the cost, then CC Storage may be perfect for you. Go to ccstorage.com to learn more. Now back to the episode. One question I do like to ask too, before we wrap it up, is kind of, have you had any wild horror stories of tenants that, you know, stuck out in your mind? Kind of just, you know, is there anything like that sticks out in your mind? One terrible tenant that you've had over the years?
Well, we've had to auction off a lot of tenants. I mean, this is a part of the process, is that when tenants stop paying, that we have to auction off. I would say some of the more memorable ones, were really like some of the tenants leave, they leave some pretty valuable things inside of those units. Right now, we as the owners, we don't get it, right? We don't keep it, but I've seen pictures of what is going to auction, and there's some like nice vehicles inside there. And these vehicles are like, they're basically going to get towed away, because we can't really auction them for the auction process, but we end up getting a tow truck company to pull these vehicles out of there. But when I look at them, I'm like, that vehicle's worth a lot more than, you know, I mean, people will buy that vehicle for like a good amount, you know, I mean, and so it's just surprising that they're going to let it go. And the other things I've seen, I've taken over properties, and sometimes I go through the rent roll just to see how long people have been there. And one of the properties that I took over was built in 1985, I think 86. And there was at least 10 people that had been there since like 1988. So there's 86, 87, 88. So like at least 10 people that have been there that whole time. Wow. And I was like, oh, okay, that's good tenants, I guess. They don't, I don't think they're going to move though. So
yeah, that's wild. That's the kind you'd like to find and just fill up your facility with, huh?
Yeah, exactly. Sure. Wish I could find more of those.
Awesome. Well, hey, if I had one last question I can ask you, if I was getting ready to invest in self-storage, what would one piece of advice be? If you have one kind of nugget that you would give me, what's the one thing that you would tell somebody new to getting started with, you know, investing in self-storage that you've kind of learned through your experience?
I would say the one thing that I wish there was one thing that only one thing that you had to do, but really, if I was just to point at one thing, is that you need to be around more people that are doing what you're doing. So that means you need to be attending meetups, listening to podcasts like yours, Ben, listening to, or, you know, reading forums, whatever it is that is going to get you around the people that are doing what you want to be doing. Okay. Right. And then that will provide you hopefully with education, as well as some inspiration of what's possible out there and what you can do. Okay. And awesome. And potentially, if you can form a relationship with any of these people, then maybe they can even help you get into deals and find deals for yourself. So I would say that's probably the one thing, but there are many things that can
for
help,
sure
a new person for sure.
For sure. But no, that's a great piece of advice. And yeah, very, very insightful. I think sometimes people would just overlook that as an option. You know, as I've been involved in some different businesses, and it always seems like, you know, you're competitors with whoever you're across town from, or, you know, everybody's competing for something. Right. And so in the self-storage industry, though, it seems like people are a lot more open to those kind of conversations and kind of providing insight on, you know, their experience and that sort of thing. So even finding somebody locally, just, you know, as far as a mentor or something, that's a great piece of advice.
Yeah, absolutely. And they're out there, right? You can attend all those meetings and meetups or whatever, and then you can find those people that will help you out.
For sure.
Sure.
Awesome. Well, hey, thank you so much for your time today. It's been awesome talking to you, and appreciate having you on the show.
Excellent. Thank you, Ben. And you mind if I just give out contact info if anybody wants to reach out?
Oh yeah, absolutely. Yeah, if you don't mind, provide your contact info.
For those of you who are, Instagram is probably the best way to get a hold of me. So if you're on Instagram, it's just my first name, Powell, Powell, dot. My last name is Chi, Chee, 2 E's. So if you just search for me at powell.chi, I'll come up on Instagram. You can just send me a DM there. If you DM me the word Radiant, I'll also provide you just a few resources. Like if you're interested in setting up a call, we can set up a call. Or if you're just interested in finding out what type of deals that I have, that they're there as well. And then if you're not on Instagram, you can always reach out to me. It's Powell at radiantwe.com. So that's my email address.
Awesome. And yeah, I even saw some stuff that you have on LinkedIn as well. I was actually watching your video that you did about roll up, right? So I was going to kind of ask you about it a little bit. Didn't get a chance to there, but maybe at some point we can talk about it a little bit. But I thought it was very interesting, that strategy going into that. So
yeah, appreciate that. Yeah, thank you. Yeah, we'll do it another time.
This podcast episode was brought to you by CC Storage. CC Storage is a property management software that helps you pass the fees of credit card processing onto your customers, so you don't pay credit card processing fees ever again. If you enjoyed the podcast, there's a link below where you can fill out a form and be interviewed on the podcast with myself. If that interests you, please click the link below and we'll be in touch. We hope you enjoyed this podcast episode. Don't forget to check back next week for another interview with another self-storage property owner.